Hi, my name is Zachary Gauge. I'm the head of European real estate research, excluding the German Swiss region for UBS, and I'm going to be talking about the UK property market. So clearly one of the biggest topics facing both landlords and tenants at the moment is what to do with the large accumulation of unpaid rent, which is obviously built up during the pandemic. Now, the government has just recently actually extended the moratorium to March 2022, which gives tenants and landlords more time to come to a conclusion. In most cases in the UK, landlords and tenants are working very constructively together to put an arrangement in place, and now that businesses have started to reopen, to start to repay some of the unpaid rent. But clearly there are still challenges where retailers have perhaps taken advantage of the situation to put pressure on landlords to improve their situation and to close stores which they don't want to operate despite being in a strong financial position. In this case, clearly there will need to be some arbitration between the landlords and the tenants to smooth over the situation. But unfortunately, as things go on, this is going to drag well into next year and create further uncertainty over the retail sector, which is already struggling with the considerable shift to e-commerce and the challenges from the pandemic. So clearly, with all the stress that the retail sector has been under, we are getting questions now on whether there's perhaps opportunities to take advantage of that distress and buy into the sector at very attractive pricing. What we're actually seeing is that the opportunities in the retail sector are coming more from relative value, but for good quality assets. The only real distress we're seeing are in areas where there is real fundamental problems with the assets, and that's in particular in the shopping centre market, where we have seen a few sales be forced through by lenders who have had to take the keys back as the assets have fallen into negative equity and various covenants have been breached. Where we think probably investors should be focusing is on the retail warehouse market. Now, that's not a sector which is in distress per se, but because of the challenges facing the retail sector, yields and pricing has fallen to a very attractive level. And so what we're now seeing is a lot more investor interest in these retail parks, where actually the income streams are still relatively sustainable. A lot of the tenants have been able to operate during the pandemic, but because of all those challenges in the retail sector, they're actually able to get a very attractive yield, certainly compared to what's available in other sectors. And this is where we'll be focusing our attention rather than on the real distressed assets, where probably for UK retail, there may not be a future as a retail asset. But as I just touched upon, the investor interest and certainly the stronger occupier market in UK retail has been focused in these sort of out of town retail parks. And really, this was a trend that we saw quite a long way before the pandemic. So really, when e-commerce started taking off, people could obviously buy a lot of goods online. We saw that there was a significant fall in footfall for particularly sort of town centre shopping and shopping centre shopping, where there's issues of parking. It's harder to get around from store to store. The stores are generally smaller. And we already found that actually out of town retail was better suited to that format. Car parking was free. It was much easier for the kind of click and collect model. People could stop off, park, pick up products. And that was all relatively easy. And really what COVID's done is accelerate those processes. When you think about, the challenges of the pandemic and, being indoors and that kind of thing, retail parks are obviously much bigger. They're much more spread out. The floor plates are much bigger. They have more capacity. And of course, that means they can hold more stock. So the challenges for sort of in town and the shopping centre have been much more acute, and really what we've seen is the pandemic accelerate those trends towards out of town retail performing better than we observed before the pandemic. So offices has been a huge topic of conversation obviously for the past 12 months, but really our view on offices hasn't changed an awful lot since the start of the pandemic. We said early on that we don't believe that people are going to be working from home forever. We don't believe that this means the death of the office, but clearly it's going to have a major accelerating impact on the trend of working from home. And what we've seen now from numerous surveys, and we're starting to now see it from the leasing data, is that employers and employees recognise the benefits of having some flexibility. Most people want to be able to work from home, perhaps on 1, 2 or 3 days a week, but the office as a central point for people to meet, to interact, to see clients, all those features remain really important. So what we see going forward is that the office will still very much exist, but the types of offices which are likely to do well are going to be those offices which can adapt to provide the facility that we expect to be the most important going forward. And we've established that people can work from home quite comfortably based on just doing their kind of desk-based job. What they can't do from home is have those key interactions with their colleagues and clients. So the offices which can facilitate those interactions and really add value to the journey for going to that office for the employee, the ones which are going to survive. So what we think that's going to be is a shift towards much more kind of central offices where if someone is traveling to the office, they don't just get to go to the office, they can go out shopping, they can meet friends, they can go for drinks after work, but actually the office itself also providing those really interactive facilities. So we expect those kind of offices to do well. Of course, transport remains key because even if people are only going in 2 or 3 days a week, it has to be very connectable. And actually, if people are moving a bit further out because they're taking advantage of the shorter commutes, the office still needs to be very connectable, particularly by public transport and overline rail networks. So those are the kind of offices we think will do quite well. Where we see a lot more challenges is in the kind of out of town, sort of suburban business park office space where there's much less going on around the office building, and actually the office space itself is normally a bit more dated. It's generally just kind of rows of desks, and as we've established, actually that can be quite easily replicated from people's home working. Well, one of the things we've seen during the pandemic is a real sort of herd mentality with investors, and because the two sectors that have really been, the obvious winners are actually very obvious. Clearly residential has had a huge amount of interest because of the safe income and all those kind of features. And logistics, even before the pandemic, but increasingly now is the really obvious pick. But that creates a big problem because these are not huge sectors in the UK. And when you have a huge amount of investor capital chasing a relatively small market, you get huge price inflation. And that's exactly what we've had. And I think we need to be a little bit cautious and perhaps a bit more open-minded because, obviously buying into sectors at record high pricing and record low yields doesn't necessarily deliver the best returns. And when we look at previous crises, actually some of the best returns have been achieved by being slightly more contrarian in our views when we assess the market and look for perhaps areas where not everyone is chasing, one type of asset. I've already mentioned in this interview the retail warehouse parks, where we think there's a really interesting piece. We think those parks obviously suffered because of the negative attention around retail, but selectively there are some very strong opportunities. Another area that we're really interested in at the moment is life sciences. And this is also very popular, but it is an area that we actually see really strong fundamental growth and very little supply. It's not just been a COVID story. There's been, particularly venture capital money pumping into these companies for some years now, but they simply don't have the space to expand and to grow as that capital is facilitating. So that does create an opportunity for, real estate players to come in and to build that quite unique but very, very highly demanded, laboratory and R&D space in these key locations, and actually see that really strong rental growth coming through because of those dynamics. Whereas the logistics sector, yes, the dynamics are strong, but actually the rental growth isn't necessarily as strong. So those are perhaps two of the areas that we'll be trying to think about that are perhaps slightly different to the most obvious choices that we're seeing at the moment.